The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it was a sea of red across the quote screen on the day Tuesday as we wrapped up the month of April. Pressure in grains, livestock, outside markets as well, with stocks down, energies, metals, you name it, everything pretty much just finding some red on the day on Tuesday. We're going to talk about this, though. Was it just end of the month volatility? Was it deliveries for first notice day? Was it all of the above? We're going to go through things. Joining us for a conversation, Brian Split with agmarket.net. Brian, it's good to talk with you once again. Hope you're doing well. Thanks for joining us.
Always great to be here, Jesse. Thanks for having me.
So I guess I will throw this out to you just to start here. As I kind of alluded to in the open, was it a combination of just all of the above that kind of weighed on things on Tuesday? You think about end of the month, the typical volatility, had some delivery notices in there for grains, economic news and pressures there. Just felt like everything kind of combined together to act as a headwind here for much of the day on Tuesday, Brian.
Yeah, I think that really sums it up. Deliveries was part of this situation today, none on corn. And interestingly, we have seen the corn spread between May and July continue to narrow while we're in delivery. So it's at the narrowest point that we've seen in several weeks. And so that is very different from what we saw in the last two delivery cycles, being the December contract and the March contract. So just something interesting to see there. And I think you're seeing some pretty strong cash bids out there, especially when producers are more focused on planting than they are marketing at this current point in the year. But outside markets were heavy, energies were heavy, the dollar was up a pretty good clip. We had metals down sharply, gold down about $50, silver down $1 an ounce there. So it was kind of the theme of the day, and even some of the outside agricultural products like cotton, for example, down about 300 points in the July contract. So it was not just the grains today, but we did feel it certainly, and especially in the soybeans and in the hard red wheat.
You mentioned this to me too, thinking about some of those other outside commodities, even cocoa, the amount of volatility that we've seen in cocoa as of late, things like that, even interesting to watch some of that action, Brian, because when everything like that's kind of coming together and showing pressure, it's just a risk off day, right?
Yeah, I mean, in part of the cocoa thing, they did increase margin requirements on cocoa futures to $14,000 per contract. And so just think back to the beginning of the year, that was around $2,000 a contract. And then also thinking back to the beginning of the year, the move in July cocoa from the low of the year made in January to the record high that we made, today's low that was made overnight was a 50% retracement of that whole rally. And we did that in 7 sessions, and most of that was in 2 sessions, being today and yesterday. So why is the margin on cocoa $14,000? Well, today's trading range was 1,500 points. That's a $15,000 move from the day's low to the day's high. That's why margins are 14 grand right now.
Yeah, just a very interesting market to watch, no doubt. In terms of the grains here, you mentioned how corn kind of interesting here, basis firming, that spread firming up as well there in the front months. And, largely I feel like this corn market, no matter what news you want to throw at it, you look at these charts, it's held up well here throughout the month of April, Brian. I just wonder, can it continue to hold up? And I know it's not fun to watch. It's kind of boring, but can corn continue to hold here or even find a little bit of support to the upside as we get into the month of May?
Yeah, it's funny you say that because I kind of had the same sentiment. I wrote a blog for another organization, and the title was, "Is Sideways a Win for Corn?" And I think the answer right now is yes, right? So we're going into this period here where planting is right at last year's pace. It's above the 5-year average for corn. So I know there's talk trying to compare things to 2019. That is way overblown. If you look at state by state planting progress numbers, Illinois, Iowa, Indiana, for example, we're way ahead of where we were for this week in planting in 2019. So it's a different story. Now, I do know, yes, we got a bunch of rain. There's more rain in the forecast, so there's going to be some slowdown, but by no extent are we close to what we were 5 years ago as far as that planting delay story. But to your point, I do think the fact that we've just been going sideways, which is really counter to what the early trend was in the year, where it was like if it was a no news day in corn, and we were just doing whatever, we were probably down 5 or 6 cents, right? So now our no news days, we might be up a couple, we might be down a couple. You think about May while we're in delivery, we had lows in March at 422. The March high was at 448. The midpoint is 435. So, here we are, still above in the upper half of the trading range for last month. April was an inside month, meaning we traded above last month's lows, but also below last month's highs. So it was more of a consolidation month. I will tell you, the continuous corn chart, and I know we've talked a lot about 10 years ago, and I still watch, what did we do 10 years ago? What are we doing now? And so it's pretty incredible. You had 3 months in a row in 2014 where you had highs 438, just under that price, then a little bit lower the third month. And then on the fourth month, we got through that 438 high, and that's what started our rally to our seasonal high, okay? So now we look at corn the last 3 months this year, and it was 448 and 3/4, 448, and this month 444 and a half. So it's like the same exact monthly highs, but just about a dime higher than 10 years ago. And so what we need to see in order to have that same breakout on the continuous chart for corn is we need front month futures to get above 450. That can be accomplished in early May by the May contract, as it is still technically the front month. But May leaves the board, July becomes the front month. If that is above 450, it's the same technical setup and breakout to the upside on a monthly chart as 10 years ago. It should lead to 2 months of buying. Is it going to be exciting rally? Probably not. Might be more of a slow stair step type of a rally for 6 weeks is what I would envision. But if it gets exciting, great. We just saw wheat make a very exciting move because the funds decided, okay, I'm not getting paid to be short anymore. We're pulling the plug. So I think the fund manager right now is trying to cover corn shorts, but they're trying to do it delicately where they don't take resistance out. If they can kind of float it up to the highs, to the upper end of the trading range, and then back off on covering their shorts, let the market pull back a little bit, they'll continue to do that if they can. But if there's a point where they start taking it through resistance and now other people want to buy it besides them covering shorts, now we've got a little bit more momentum going. So I think July corn above 460 would really solidify the fact that the funds are exiting. And then at that point, we would expect them to get to near flat. Habitually, sometimes they decide to go long when they exit a short position. If they do go long, I think it's going to take some rather extenuating circumstances, and I don't see them being long corn for much more than a few weeks personally.
We're talking today with Brian Splitt from agmarket.net. And Brian, when you talk about the corn charts and you brought up the wheat rally as well, and I think that this is important to remind folks that have those orders working, have those targets out there, and have your marketing plan set because, even if we do get some sort of a stair step rally, say we get 460 on July corn, or maybe we go a little bit higher than that. Some folks might be saying, I'd really love to see 5 again, whatever the case is, have those orders working and be ready to, maybe take some of those price levels if we do hit them, especially if we maybe, accomplish it in the overnight session. We've seen that happen time and time again, haven't we?
Yeah, Jesse, some of my favorite orders are ones that I forgot about, right? So when I started getting wheat sold in the July Chicago wheat, at 6:30, and I'm like, geez, I forgot about that order. Oh, wow. Okay, great. We're here. And those are orders that I love. Market orders get filled right away. You know exactly where you're at, but it's those old orders they put out as targets, and then they start getting filled. You're like, wow, we've had that order out there for a few months, and we finally got there. That was a target that we had set a long time ago. I love those orders.
Yeah, those orders just things like that. It's all part of that marketing plan and managing your risk for sure. You brought up wheat too, and I'm curious. What was it? 7, 8 sessions higher in wheat. I was impressed that Chicago wheat on Tuesday was about 5 to 8 cents off the lows at the close. I thought that was maybe one other thing to take home as a positive, even though we were lower on the day. Do you think the wheat rally, though, as you look at charts, do you think the wheat rally's over for now, or is this just all kind of a temporary setback here with the end of the month volatility, Brian?
Hard to say quite yet. And I think that July recovery happened for two reasons. Number one, so July Chicago wheat had head and shoulder bottom. We broke through the neckline, took out the 100-day moving average, right? And then that started to accelerate it higher. So what we did today is we went right back down. We hit that 100-day moving average, retested the neckline of that pattern. So from that respect, it still hasn't actually hit its upside objective. The upside objective, the measured objective of that head and shoulder pattern is 640. We got very close, right? We got 632 or so. But I could see Chicago wheat coming back and, as you might say, retesting the scene of the crime and then trying to float back up a little bit. But I also feel like part of the reason that the soft red performed well today compared to the hard red is because during this rally, we saw hard red gain on soft red substantially, right? That spread was trading in the low teens. I think it bottomed out around 12 cents, HRW premium and SRW. And then on the rally, we took off and got to near 50-cent premium, right? And that happened very quick. So I think also part of today's recovery in the SRW off the lows was profit taking in that spread between HRW and SRW.
One more thing on the soybeans. I know there's been this chatter out of Argentina here early in the week with the port workers and stuff like that going on, and just news out of South America. Do you think that could have any potential impact in this soy complex? Any other big notes for you in soybeans here as we're watching charts and kind of watching the news headlines, Brian?
So soybean meal does seem to have broken out of what we would call an ascending triangle. We had a lot of highs that we were making around 348, 350. And then there was kind of a flat level of highs that we just continued to fail at. And then below those highs, we had formed an uptrend from last month's lows. And so getting through 350 was a breakout through that ascending triangle. We did have a move today where we got through the 100-day moving average. Then we went and pulled back. We revisited that support again. We went down to just above 347, I believe. And then we went back and closed right at last week's highs, well off the lows. So if it's going to be an Argentina story and it's the port strikes and that's what's supporting the market, we will likely see meal continue to be the leading element of that. The measurement technically on that ascending triangle would be to about 369, which takes you back to highs that we were making in late January at the beginning of the year. So that would be the technical objective. Now, unfortunately, a lot of times if the funds are buying meal, what are they doing? They're selling oil. We had oil make new contract lows today. So I think you also have some kind of a looming decision on how this whole biofuel thing is going to look, right? And so I wonder if that didn't have a hand also in the bean oil weakness today, besides the strength in meal.
And that news expected out sometime Tuesday afternoon was the latest we'd heard. And so we'll be analyzing that news and see if it has a big impact in this market or not moving into the month of May. Brian, let's go to livestock. Cattle trade, heavy pressure there. I know that was all kind of caught up, cattle and hogs, in the risk off sentiment, but also too, cattle just continuing to fight these bird flu headlines. You got USDA testing ground beef now in some retail stores for traces of the bird flu virus. And even though they say there's no risk to human health and everything's good for consumption, obviously still the psychological impact can continue to kind of weigh on these cattle markets here. And it creates a bit of an unknown, doesn't it?
It does. We still have that fundamentally friendly backdrop, but there's these other things that are creeping in, right? We saw a big break because of the initial report of bird flu, the transmission to a human. Now, again, it's the testing of the ground beef. And so I feel like me being skeptical, it's like, all right, if they're going to test for it, they're going to find it somewhere. And then it's just, what does that turn into? Does it hit the media? Do you start seeing it on, nightly news that, we've got that in ground beef? And so that would be the concern. And I think, to your point, it's more of a consumer sentiment thing. Again, I'm very distrustful of the government. I worked for them for 5 years in the Marine Corps. I see how things operate. I don't like it. I don't like government at many levels. Maybe I'm saying too much right now, but I think there's agenda to get people to eat less beef. And so, do the powers that be take this as an opportunity to try to push that? I hope not. I hope this stays relatively quiet. But we'll talk cattle charts here. I'm going to paint a picture for you of what I don't like. And this goes back to 9 years ago. We were making record highs in fall of 2014, right? We get a several month pullback. And what do we pull back to? We pull back to the 20-month moving average, okay? So then let's think back to last fall. We have that several month break in December. What do we pull back to? It was a 20-month moving average. We did it on both the live and the feeder cattle. So then back 9 years ago, we get a couple month recovery off those lows. It eventually fails through that low that we made against that 20-month moving average, and then travels down to the 100-month moving average. In the case of the 2014 into 2015 timeframe now, right, for that break, that took us to very close to a 62% retracement of what at that time was a 5-year rally. Okay, so now what that means is that you've got the 100-month moving average in June live cattle around 128. Okay, so the level that needs to be protected absolutely is about 160, 162 on the live cattle. That is a monthly level. That is not thinking about June or August or, the monthly contracts. This is the big picture. If we find cattle on the other side of 160, it's probably going to 130. If we find feeders on the other side of 210, probably going to 160, right? That's the 100-month moving average there. Mm-hmm. So I think if you are thinking cattle, right, go out and look at, Feb and Dees live cattle 160, 162 puts. They're, $1.50-ish. Okay. Go out to the feeders, buy a Jan 210 put. Just get it done. I hope I lose you $1.50 or $2, but the problem is if you actually in the long run end up needing that put, it's going to be a catastrophic move.
Well, of course, past performance not indicative of what could be in the future, but sometimes looking at history can tell us a lot of things we need to know and watch for. That is for sure. And to your point too, Brian, I think USDA is trying to catch up to this whole situation. And I know I was watching ABC News last night, and I get a 10-second blurb on testing of ground beef, and to the average consumer, they're going to see that and they're going to freak out because there just wasn't a lot of context to it. So there's a lot of concerns about the psychological impact here going on right now. We're about out of time. Let's wrap it up. Anything final you would add or share or reiterate for folks here across any of the markets as you look at things here, wrapping up the month of April, Brian?
I think just to your point, about the marketing plan, having targets, we're at that time of year where we should typically see a seasonal move. If you look at the months that we see the month that we see the highest amount of those seasonal highs, it's June. And a lot of those highs are either wrapped around that June WASDE report or that quarterly stock and planning intention report. Within, 3 to 4 sessions of those reports, we very often make the high for the year. So I think whoever is handling your marketing, or if you're just doing it yourself, however you're approaching it, it's the time of year to not get lulled asleep by this sideways move that we've had for the last 2 months and really start keeping track of what's going on or talking to your marketing advisor or consultant or broker, whoever they are. Time of year where you probably want to communicate a little bit more often.
Well, and if folks want to work with you and the team there at agmarket.net, I know very easy to reach out, agmarket.net for all the contact information. Brian Splitt, it's always good to talk with you, my friend. Thank you for joining us here on Market Talk once again, and we'll let you go. Have a great week. We'll talk to you again real soon.
All right. See you soon, Jesse. Thanks.
Brian Splitt with agmarket.net joining us here on the show today. We're out of time. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.